Welcome back to Trader UK, Adam here. Around 2 months ago, I made a video regarding a rumoured merger between GGPI and Swedish EV manufacturer Polestar. Yesterday, Polestar confirmed their partnership with Gores Guggenheim, so it looks like this SPAC merger with GGPI is actually going to go ahead. So today I want to share with you an article, 9 things to know about GGPI stock and the Polestar SPAC merger, as a lot of the key points that they raise in this article are things that I agree with and things that I want to expand on a little bit further. So number 1, the name Polestar comes from a Swedish racing team that originally operated as part of Volvo. In 2017, it split from the iconic automaker to become a separate company and produce only electric vehicles. Now, the fact that this was a racing team has no relevance really to me. I don't think that's too important, but the fact that it stems from Volvo is going to prove hugely important in the future. I compare this company a lot to Lucid Motors, who have their SPAC via Churchill Capital. However, the big difference with this one, I think, is that backing with Volvo. So they've already announced that they're going to use Volvo's factory in the US to produce some of their models. So they're able to sort of piggyback off that infrastructure, and I think that's going to give them a massive advantage over automakers that are entering the market and finding their own way, like Lucid Motors. Number 2 here, Polestar is committed to staying in its lane, says CEO. He stated that the company is not intent to be a Tesla killer. Well, there's no such thing as a Tesla killer. That's not going to happen. Tesla has cemented its place as number 1 and will continue to be number 1 in the EV space. That's quite clear now. But I did read another article with the head of UK operations at Polestar, and he did identify Tesla as key competition, or the key competitor. He went on to say that Polestar is not going to take that number 1 spot from them. They recognize that, but they do recognize Tesla as the key competitor. So it's nice that they're not really shying away from it like this article might suggest. In that other article, the guy went on to say that he does not see Polestar being a 500,000 vehicle a year company. He sees it being much bigger than that. So, I mean, that's quite nice to see that ambition. 500,000 vehicles a year is about what Jaguar Land Rover do at the moment, and they're saying that they don't aspire to be like that. They aspire to be much bigger than that. So it's nice to see that ambition from them. No, they're not going to be a Tesla killer, of course not, but I think the EV space in general is plenty big enough for all of these EV players. Number 3, the other parent company with ownership in Polestar is Geely, a Chinese auto giant with global reach. So this is quite important as well, I guess, for access to the Chinese market at some point. Polestar already sell vehicles all around the world in key markets, but quite a low number of vehicles, probably between 10 and 20,000 vehicles a year at the moment. It's low in terms of production and sales volume for the moment anyway. But the good thing is they're already selling into all of those key markets. And of course, I imagine China is a huge ambition for them. Geely could provide the key to the door, as it were, for China. So we'll see how that plays out. But of course, partnering or being associated with Volvo and Geely can only bring huge benefits. Number 4, Polestar is currently at work on an SUV that will include the LiDAR system pioneered by Luminar Technologies. So that's quite interesting. We know Tesla aren't keen on LiDAR, and Polestar obviously going down that route. So we'll see how that plays out. I think further down the line that may be relevant, probably when it comes to self-driving technology. But for the moment, I don't see that being of huge importance. I think plenty of other EV manufacturers have gone with LiDAR. It seems to be Tesla that are kind of refusing to do that for the moment. They also mentioned that they're working on the SUV. So this is the good thing about Polestar. They're already producing vehicles. They have Polestar 1 and Polestar 2. They have 3 new vehicles in the works. They plan to release a vehicle next year, the SUV, a vehicle in 2023, and a vehicle in 2024, just into 2025. So every year we should see a release of a new vehicle, and we should really see volume start ramping up across that period. Number 5, aside from being backed by Volvo Cars Group, Polestar can also boast that actor Leonardo DiCaprio is among its early investors. So this reminds me, I don't think it has huge relevance, but it reminds me a little bit of Tesla in the early days when they used to sell in shopping centres, certainly in the UK, and they were backed heavily or promoted heavily by will.i.am, if you remember. It's that kind of situation again, but certainly it's not a bad thing from a publicity point of view. Number 6, the merger includes a PIPE investment of $250 million from institutional investors. So on top of the money that they'll raise from the SPAC merger with GGPI, Gores Guggenheim, they'll also get that $250 million from institutional investors. So the difference here, think about Lucid Motors when they got their investment from their SPAC merger, Churchill Capital, the way that one worked. When they get that capital, they're going to have to use that capital to build out the infrastructure, to ramp up production. Not that Lucid have quite got there yet, but it's going to go into factories, gigafactories, battery plants, all that kind of stuff. For Polestar, that money should go a lot further than for a company like Lucid because they already have a lot of that infrastructure in place. They're going to be piggybacking off of Volvo. They've already made that clear. So I would expect that big cash injection to go a really long way for Polestar. Number 7, pending no further complications, the finalization of the merger will likely net a valuation for Polestar of $20 billion. It represents the largest blank check merger in the EV sector since Lucid Motors, which was at $24 billion in their merger with Churchill Capital earlier this year. So I don't know if you remember with Churchill Capital, but that was an absolute mess, that merger. I can't remember if it was Bloomberg or Forbes, but somebody printed an article and they got the valuation completely wrong. And at one point, Lucid was technically valued at about $60 billion. And of course, they had never made a vehicle. So hopefully, this 20 billion valuation here is a little bit more accurate. But I think a 20 billion valuation for Polestar compared to currently Lucid has a valuation of $41 billion. So Lucid still haven't sold or produced a vehicle or put a vehicle on the road anyway. So Polestar is way ahead of them in that respect. They're not doing big numbers, but they are selling thousands of vehicles, tens of thousands of vehicles around the world as well, not just in one location. Lucid seems to me like it's going to be a US brand, certainly for the time being. And in my opinion, Lucid is not going to have a huge market share in the US. So I much prefer already Polestar over Lucid, certainly at these valuations. And to me, if Lucid has a $40 billion valuation at the moment and Polestar has a $20 billion valuation, they almost seem like those valuations should be inverted because Polestar should certainly be the more valuable company, I think, at this point. Number 8, unlike Lucid though, Polestar has already released multiple vehicles and one model is significantly more affordable. It may not want to kill Tesla, but the Polestar 2 has been called the closest thing on the market today to the Tesla Model 3. So yeah, they probably are going to be in competition with Lucid. Maybe Polestar is a little bit cheaper, but Polestar does brand itself as a luxury brand. So that'll be interesting. I think they will end up being in direct competition. So the Polestar 1 and Polestar 2 have already been launched. And I think the Polestar 1 was about £140,000 entry point. The Polestar 2 was just under £40,000 entry point, and they've already said that those represent the range in vehicles. Everything else will kind of come in between there. So yeah, they're fairly expensive models, I would say. They probably will be a little bit cheaper than Lucid Motors, and they'll probably be in direct competition with NIO in the Chinese market as well. So it'll be interesting to see how that one plays out. But again, because they've already got 2 models, because they're planning to launch a model per year for the next 3 years, I think they're way ahead of Lucid in that respect. And I think their valuation doesn't represent that at the moment. And number 9, they say it's not uncommon for the stock of a company nearing a merger to dip, but so far shares of GGPI stock have enjoyed a day in the green, rising this morning and staying consistent. Since this article was written, I think it's pulled back 1.5–2% or so. to be honest, in the long run, I don't think that's going to play much importance. I think a 20 billion valuation is really undervaluing this company. I will add now, I will add up until the merger, and if the price pulls back a little bit, I will continue to add. So I like GGPI, currently $10.28 a share. The market is pulling back a little bit today. This is big competition though. Is it competition for Tesla? No, not really. Nobody is competition for Tesla at this point anyway. Is it competition for Lucid? Absolutely. This, again, in my opinion, a much more valuable company, much further ahead of Lucid in terms of putting vehicles on the road and entering different markets around the world. They have the backing of Volvo, they have the backing of the Greeley Group, and they can piggyback off that infrastructure. This is also great competition for NIO, but of course with Polestar, you're not going to have that same political risk that you have with NIO. So we'll see how this one fares up and how the valuation holds once the merger completes. I've already been adding, I will continue to add pre-merger depending on what the price does. And then once the merger is complete, it's always a bit funny with the valuations because since Churchill Capital, I never trust these articles too much, but a 20 billion valuation for Polestar is very attractive to me. That's all for today. I hope you enjoyed that one. Let me know your thoughts on GGPI and the Polestar merger down in the comments. Thanks for watching. I'll see you next time.